Yo, yo, yo. Welcome back to the channel. We're going to cover AMC, but first, I want to go through my technical logic on a trade that I was like, I didn't alert that like people should take the trade or whatever, but a trade that I basically was uh, doing on SPY going into close today. Um, because I think that like I have some things that I talk about on a day-to-day basis on the channel from a more macro perspective that can be applied to this logic on the more micro time frames as well. And I know a lot of people are interested in learning how to day trade, and I think honestly, I'm not recommending that people day trade, but I think that being a little bit more liquid and being able to assess the market on a day-to-day basis is going to be something that people are going to want to do in the next coming years, because I do project that there's going to be some turmoil in markets, maybe even significant downside. And so you're going to want to be able to adjust to and adapt to that environment. And I know day trading is not for everybody, but you can apply what I did here to pretty much any time frame. So you can do it on a larger time frame if you want. You can do this over the course of days. You can do this over the course of weeks. Obviously, it's going to require a little bit more patience if you do it that way. But for people who have jobs and stuff, obviously, it's just a little bit more reasonable for most people, right? So, so I got back from the gym. I wasn't like sitting here looking at my screen all day. I went to the gym, and then I came back. And I looked at my phone and I tweeted this out because I looked at SPY and I said, I'm calling BS on this rally for SPY. And the reason that I was calling BS on it is because if you zoom in to this section of the chart, and we can do it part by part. So this is all that I saw on the daily chart, okay? And we know that SPY is generally in a downtrend right now, right? So I saw this rally, and it was all based on this pump right here, right? So you had this volume pump come in, kind of out of nowhere at about 12:45 here, and then you see this rally. But as this rally is going, you're seeing that this is a 1-minute chart. The red volume candles are outweighing the green ones at large, right? So like you have these green ones that kind of outmeasure these red ones, but at large, it just, to me, I was like, this looks a little bit more distributive, so let's take a closer look at it. So then I drew here, this is a couple minutes later. Literally 2 minutes later, I said that I was buying puts. And the reason that I said that is because I looked at the volume, and then what I looked at was this uptrend. Let me see where that buying puts tweet was. Yeah, I looked at this. I would have looked at it like this because this was the recent bottom. And you guys know that we talk about wedges a lot on the channel here. I think it was like this, yeah, at the time. Because remember, I haven't seen this part of the chart yet. So I've seen this so far, pretty much. And yeah, that's what it is. So I was able to say, okay, look, you can see that there's a clear trend here on the top where you had a couple touches back here, and now it's respecting this. You see these wicks come in right after my tweet too. And then you have this more significant uptrend. That combined with the volume, I was like, I don't know. I don't think that this is real. Now, I bought puts here at like 438.50, and you see here that it climbed all the way almost to 440. I didn't exit my position because I was still confident we still were respecting this trend to the upside. And I also knew that what was going on was you could have been having a gap fill basically up to this level, right? Because you left a gap to the downside at open today. So I was pretty confident. I was like, yeah, like I feel good about this. I don't really remember, but I might have bought a couple more like really cheap options that are a little bit further dated out. Like I'm not trying to buy weeklies and stuff. Like that is for some people, but I like to buy them a little bit further out. They're a little bit more expensive. But if you buy, in my experience, and this isn't financial advice, just something that I do sometimes based on, how certain I am. I'll buy them like further out and really like aggressive target, right? So like maybe I'd buy like $420 puts or $410 puts for like a couple weeks out, because here those options are getting crushed by the upside. And if you just get a really hard swing down, then those options can go up in value. And it's a little less stressful. Like I just don't like sitting there looking at it like from a day-to-day basis, like all day. So I just like that. And then also I can like readjust my conviction a little bit easier because the options don't get crushed as fast. So I just like that that approach a little bit more. So so I bought the puts, and then here you get your breakout, right? And then you get your breakdown out of this. And I usually look at the 5-minute chart, but this is a 1 minute. And the 1 minute is pretty good at illustrating. You get your breakout, your breakdown, I should say. And then you close back above it, right? And then the next candle you open up and you just knife straight down. And it was kind of like a retest of this uptrend, of this rising wedge, right? This is a rising wedge, by the way. I don't know if I mentioned that already, but we talk about rising wedges all the time and falling wedges all the time on the channel. Yeah, so the weak volume, the rising wedge, you come here, you retest, boom. And right here, I was like, yeah, okay, this is a good trade. So you get this big old knife. And then I said here, probably give me more blood. Yes. I literally at this at this candle, the very top of this move, I said, give me more blood. Why did I say that, right? Why was I so confident? So what I did was I pulled a fib retracement from this top here to this bottom that you see here at like $436.85. And I saw the volume. Again, volume is super important, right? You see this strong red volume compared to the green. And then these green volume candles were still underneath these red volume candles. So my assessment was, hey, this is still a weak move from bulls. Bears have a little bit more control here. You could see this volume on this price swing down. This volume was a lot more significant. So, and then I would have measured actually this fib. I probably measured from here, which is the top of the body of this candle. Because to me, this is when the move started. And then I would have measured down to here at 436.85, like we said. And then boom, I saw we were approaching the golden pocket with that weaker volume. And sure enough, boom, let's see how perfectly timed this tweet was. Just because I'm curious. Oh my goodness. So this is the 5-second chart. I mean, I literally tweeted the absolute top second, like 5 seconds. Let's get it down to 1 second just because I'm curious now. That is hilarious. Oh my goodness, dude. I mean, I probably tweeted, was like making this tweet down here, so don't give me too much credit, but holy shit. Oh, man, and then immediately you just knife right back down. That's so funny, though. By the way, if you're not familiar, the way that this works is on TradingView, when I put my tweets on here, I literally just copy the link from the tweet and I paste it onto the timeline, like onto the chart, I mean, so I can't really tell it what the time is. It just literally gives you the exact the exact time. So anyway, so yeah, you're approaching this golden pocket. That's why I was saying give me more blood. And actually, I would have expected it to go to this 438.50, but it never made it there. And that happens sometimes, but you get the general idea. You just broke this 0.5 and then you broke down. So then, so then you get sent right down. And then here, this right here is, I did hashtag spy. And then that meme where the guy, if you just search more, like when you're searching for GIFs, there's this guy, his face is like filled with red light, and he's like, more, like he looks all stressed out or something like that. He kind of looks like Little Nicky. I don't know exactly what movie it's from or anything like that. I'm probably, I don't know shit. So anyway, so then I posted that tweet, and then boom, you get another knife. And the reason that I posted that tweet is because I'm looking at, I think at this point, I'm just trying to put myself in my own head. I'm looking at this more macro fib from this upswing at this point. And I knew that based on the volume, generally speaking, because the bears had a little bit more control. You can see these volume candles down here. If you zoom in, damn, we got a big old volume spike at the end of the day. Because of this volume spike right here, well, and just generally the bears being in control now, I can tell that they're in control. And the weakness of this move. A lot of time with rising wedges, you're gonna end up somewhere close to where you kind of came from, if that makes sense. And I saw this kind of like distributive, like this looks like a Wyckoff distribution, right? And I was like, let me see, where's that? Oh shit, did I take it off? Oh, sorry. There you go. I just knew that, I just had a sense, I guess, combined with that volume, that boom, you're gonna have another knife down. So you got another knife down, and then here, once you got that last knife, I said I still think more downside is possible, but don't be greedy and don't let the trade go to red. And I just wanted to include this because, and literally literally probably as I'm tweeting this, it goes and blasts off, which I mean obviously is not preferable, not preferred. But I mean I don't want people to be trading based on what I say. But you immediately got this blast off as soon as this tweet landed. I don't want people to really be trading based on what I'm saying, but so much as I want them to understand the logic, right? So the tweet that I posted, that was the other thing. So on this swing up, we're going to have to zoom in because of this big weird volume candle at the end of the day. I also said that was another reason that I was very convinced that you were going to see this downside. Generally speaking, throughout this move up, you had decreasing volume. That was included in the tweet as well. So you see the volume trend is just generally to the downside. Like it's not as strong of a move as you would like to see. If you wanted to see price really continue to, and right now we're in a bearish trend. Okay, so but like a time when you'd see that you could see price continuation, see. You just get these. This is just super distributive, man. Like SPY is just so distributive over the course of the long term. So this is a bad example. Anyway, we're gonna get into AMC in a second. I just wanted to kind of break this whole idea down. But look, you can see it pretty clearly here, right? So as price was trending up from the low of the day, which is like 427.1, right? You get this bounce, but there's no significant volume. And then as price is just climbing, you can just see the volume just tapering off. I just, and no, no strategy is 100%. Like you're never gonna nail the top and nail the bottom. Like, I mean, you can. I mean, I have, right? But I'm saying like on a big trade where you're, putting in a lot of risk, everything, it's hard to time the bottom and the top of a move, right? And look, SPY continues to knife here. I did swing these puts. I'm not out yet because I just, I was convicted that, you're going to see this downside, and look what you got. And I was kind of looking at this level too. So, I mean, what are you going to do? Just because you could see that this was kind of like a ceiling, and once you broke there, so you're definitely going to come back and retest it. That's another good indication. But what are you gonna do? Hopefully, not that I want you to lose money if you're in longs, but if we opened red tomorrow so that I could get out of these, I wouldn't mind. Let's see if I can do some real time. Yeah, you're not quite in falling wedge territory yet, I'd say, and then it's hard to tell because the volume is so much less in post market. So you might want to watch futures on this for continuation. I mean, this looks like a channel to me more than it does a wedge. Let me try and make it look. Yeah, I mean, yeah, you got some room. You got some room down here. But you are on this critical price zone, like I said. So ideally, I would have liked to get out probably by now. But we're in post market, and you can't fuck with options in post market. So I would have liked to get out, but it is what it is. Good trade nonetheless. Probably better to not swing in this market, but I mean, I took a little bit of profit just to make the trade a little bit more low risk for me, but we'll see what happens tomorrow. But anyway, let's get into AMC. So generally speaking, I do just want to briefly touch on SPY for AMC too, on the more broad more broad basis. You still are continuing in this downtrend. Like, obviously the big SPY downtrend that's been going on. Everybody knows about it. So how does that affect AMC? Well, right now AMC is down to 1592 in post. And to be honest with you, AMC updates are getting a little boring, I suppose, just because we're now, after we hit our 1450, we're kind of just waiting for the next thing to happen. So if you guys, if it's your first time watching the channel, on the channel for a long time now, we've been watching an assortment of falling wedges on the more macro scale for AMC. And this is basically our latest interpretation. There are a bunch of different ways to interpret it, and also you do have this this shorter term one that's happening kind of here, right? But you still do have some potential downside in both scenarios. And our 1450 call we've been making for weeks now, which was based on the bottom of the buy button collapse up to the $72 run in June. You get this perfect bounce right off of the 618 retracement. When measured this way, not perfect, but you were off by like 15 cents there. So that would have been a good entry thus far. If you would have bought calls or something like that, you would have done well. Right, you definitely would have had an exit opportunity. Oh, and by the way, oh, dude, one more thing, and I know that I'm kind of beating the dead horse now. We've talked about the SPY trade too much, but I think also something that you might want to note if you're interested in that. This is actually why. I said more. I think because no. But I just want to call out here that if you use fib retracements backwards, right, you can see that it kind of works in reverse, and you got rejected off of this 0.5 here, further down, and then you measure from the top to the top to the bottom here. This was a golden pocket, rejected down again, and obviously this trend has to reverse, right? And obviously, well, I guess it doesn't have to. It could go to 0, couldn't it? But but yeah, you can see that these fibs are pretty reliable places to see where that turnaround might occur. But yeah, so where's AMC? What did AMC do today? Let's go to the 1 minute chart and kind of get a closer look at what's going on. Oh, actually, let's go back to that hour right quick. I just want to look at that. Just look at it. Okay. Yeah, I don't know. Let's see. Oop. Oh my goodness, ring around the rosy, dude. Let's see. I'm just trying to see if I can. There's really, it's so, AMC's trading kind of weird lately. I'm not gonna lie. Like, yeah, this is a bearish channel for sure, and you just kind of are bouncing in between it. You could say it's a broadening wedge, but I don't know. I don't think so. Let's maybe zoom out a little bit more and see if there's anything else that catches our eye. Nothing too crazy. So we're kind of doing the same thing that we've been doing with AMC. You bounced up off of your 1450, so let's see what's happened since then and see if there's anything really to pay attention to. Yeah, I mean, you're just kind of, so I tweeted this out earlier too. I said, like, it looks like the Great Depression happened and then you're like in the 70s or something. But yeah, I mean, there's really nothing significant happening here because what you have is, I mean, you have this kind of, yeah. So this is basically what you have to watch at this point. This kind of, which direction is this little symmetric triangle, which I hate using because it's a 50-50 pattern basically, but you're looking for a break to either side of this symmetric triangle. Let's see what the volume is telling us. Yeah, I don't know. Volume's boring. What the? This thing is, what is going on? Yeah, I really don't have much to report. You're looking for this. You're looking for what direction? Let me take these extensions off here. Honestly, you're kind of in the same spot that you were in yesterday. I mean, I hate to say that, but you are. You're doing the same thing. You're continuing in this I guess you could say this is a breakout, and maybe you're gonna come down and retest this one more time before you could get a move up. But you know, I mean, this is still a yeah. This is your downtrend right now. Yep, that's your downtrend right now. So I would say a break here. What you're looking for on the bullish side, if you want to see a move up, you're gonna want to break above 1640, 1650 really, because you might see it do this sort of thing where it kind of just bounces off that 1650, breaks through, and then retests. But obviously, also you could have a fake out, and then you end up doing this. So those are the things that I'd be looking out for. We could do more in-depth analysis by saying, okay, let's look at a local Fibonacci. So from the 1450 up to the 1730, right now you have gotten a 0.5 retracement, and you kind of reverted back. You see you bounced off those 236, bounced back off of the 0.5, and then you now are in this 0.382 to 0.416 channel, which Astro showed me the 0.416 fib, which is pretty useful. I like it. And so yeah, now you're kind of just trading in that channel. So nothing. Let's look at OBV, I guess, on the shorter time frame and just get a better idea of what might be happening. I mean, you have more volume. Okay, so you had a good reaction here by bulls, I'll say. As far as from a volume perspective, you really got a good spike up on the shorter time frames, and you kind of held that, right? So these sell-offs haven't really been indicative of distribution this yet, but OBV is doing the same thing, where it's just this really sideways. So yeah, I mean, you're really just looking for what that next move is going to be. You haven't really had one. Yeah, it's just kind of stagnating right now. You're creating a bit of an uptrend here on the 4-hour chart for OBV. So that's good. And what I mean by that is this. So you could see some selling. Could see some selling in the short term, I'd say, just to come back and retest this trend line on OBV. And yeah, I mean, you're holding pretty high on the larger perspective for OBV, right? We've talked about these trends for OBV. I think you got a pretty good one here. So that's good. You're seeing some sort of reversal when it comes to that OBV. Again, I think that you could see some downside here. Just to come back and test this OBV level. And what that would look like is perhaps you come back, hit this 15.25 or this $15 level, just to establish a new uptrend in price. Because it's been some time since AMC has had an uptrend. Let me take these go to regular hours. Yeah, I mean, you can see this is very boring price action from AMC recently. Not much to look at. Let me see. Jeez, dude. Really, I mean, it really has not. It's literally done nothing. Done nothing since. Yeah, so I'd imagine that in the short term, maybe you have your sell down here, that 15, and then maybe you come back, test the wedge, the shorter term wedge. You can do all this stuff. So you can create a double bottom here, and then again, we're looking at the longer term. Let's see. You're looking at the longer term wedge, right? So that's really what we're waiting to see play out. And until we get a shake to either direction on this, on all these wedges that you can potentially draw, you really are not, there's nothing significant at this point with the chart. I'd say that you're favoring, on a broader perspective, you're favoring upside in the next few weeks. And I mean, that's probably, something to expect from SPY as well, right? So the general market, you should see the general market. And I'm not saying that this means that you're going to see new highs or anything at this point. It's kind of hard to say right now, but I'd say like the general market right now, you're probably looking at over the course of the next few weeks, somewhat of a bounce. You kind of came and hung above this 618. Um, I don't know. I feel like a lot of retail is really bearish right now. They really feel like they know that you're gonna see that downside, but you've had a pretty strong reaction from bulls in general. You can see here that these candles are really big green candles. But again, when you zoom in, they're not quite as convincing, are they? It's kind of like a pump. Like they're just pumping the price up a little bit. They're holding the price up on SPY. So I'm just trying to figure out like what do I think? Let's see. We just measured the body here. I think you probably are still, yeah, you're hanging around this 0.885 Fibonacci. Shout out to Jen Collado for showing me 0.885 Fibonacci levels. You're hanging around here, and I know that you've broken down and created a lower low here, but really the bodies and the closes of the candles are what are really important. You're gonna want to see a close above this 435 to establish this as a bottom, and then you could probably see some upside to like maybe that 450 over the course of the next few weeks for SPY, and I think that that would be good for AMC. Just because of the position that AMC is in, generally speaking, if you go to this 2130 ish level and then you get some volume behind you, you really could see some extended upside as we've discussed before, and really go up and test those $30 levels. And once you break above $30 and you get to like 35, then you're kind of in the position where it's like, okay, well, on a more macro scale, if we come back down, test this 28, bounce around here, and then you see continuation, really you could be looking for higher upside, because as we've discussed, the volume profile, now you've built up a good amount of volume down here, which you didn't have before. And so what's going to happen is price is going to naturally want to come up and visit these sort of more empty price levels, like the 22 to $20 previously traded levels, just to say, okay, you got all this volume, you got this volume floor right here. Um, right? Look like right here. You're sitting right here on this volume floor. This is a very macro, right? Very macro volume floor at the $16, $17 level. So, I would say I'm pretty confident that the bottom is in on this move. But let's talk about the potential downsides, just because it's more about trying to understand the logic and the logic behind moves, and understanding what can possibly happen, rather than like trying to predict the future. But yeah, if you pull the same Fibonacci here, right, you have room down here to this 1135. Now I've said in the past that this 618 retracement is very key, because it was the previous top. This 1450 was the previous top that AMC's price was wrestling with, right? This range of $12 to $14.50. Once you broke there, that's when you went off to the races. So confirming this level is going to be very important for AMC. And again, you can come down here into this $12 range like this. And we've talked about that before too, comparing it to the buy button incident, right? If you look at it like this, right, it would be a pretty similar move if you just kind of held this key level, and then you had your move up. Now, what would happen after that? It's hard to tell. You have to see the volume come in. Like I had a comment where a guy was like, "Oh, this guy, he used to be saying it was going to go to $200, and now he's saying it's going to go to 40 or whatever." And I was just like, well, when I was saying that, I was looking at, it was like this $50 or this $45, and if you break through these levels at this point, then yeah, you can move pretty swiftly to the upside. But now that we're down here, we have to be able to get back to this key rejection level before we can start talking about higher price targets, right? Because we're in a downtrend. Like that's just the reality of the stock, right? So we're analyzing the price action, and we're coming up with things that we think are probable or possible. And then we're trying to be stoic and understanding where the opportunities are within the stock, um, from the upside and downside potential, just so that people in the community can really understand the price action on a day-to-day basis. That's my goal. Also, if you pull the fib from the buy button bottom, like before the run in January, you can see, oh shit, you're actually sitting here holding this 0.416. Wow. Yeah, so Astro showed me this last week. It's a really good Fibonacci ratio. Add that to your fibs if you're using them. And somehow this line got moved. Sorry. Yeah, so you're holding this 0.416, and if you measure it like this, this point 0.5, the way that you'd get there, I don't really think that you're just gonna crash right down. You could perhaps do something like this, right? Uh, and then don't worry too much about the time frame, more of the price action. So you could break down here and still have a valid falling wedge. I mean, it's I would say that, if it goes to this $12, it's not the end of the world. And it holds here. I really do like the 1450, because that is that golden pocket. But, as you can see here on the more macro scale, you still, because I still see this as like and I use Elliott wave more broadly, but this is a wave 1, 2, 3, and I'm still expecting a wave 4, 5. I'm still expecting that to occur. So that's basically where I'm at with it. As you can see here, the golden pocket on the fib measuring from here, like the buy button bottom. I mean, the pre-January run bottom. Holy hell! To here, my brain's getting tired. Is $12. And then the 618 is down to $7.64. I don't think that we're anywhere near having a conversation about that yet. But we're going to want to see what this reaction looks like here pretty soon from bulls. Come up and then see how you react to this $20 level. I believe that this falling wedge has already met all the requirements of a falling wedge, other than seeing that breakout, retest, and then break up. That would confirm it. And you could still see further downside within this falling wedge, test this $12 level, and then do the same thing, right? So that's kind of what I'm looking at when it comes to AMC, SPY, the broader market. Hopefully you enjoyed the breakdown of like my logic behind what I was looking at with SPY earlier. I know that's a little different. We haven't really done that on the channel. But yeah, so that was pretty much it. Hopefully you enjoyed the video, and until next time. Peace.